Good morning. Today is July 31st, one more month in 2025 down. I'm Joe Terril, president of Terril and Company, private wealth managers headquartered in St. Louis, Missouri, with $900 million of discretionary assets under advisement. This is another video update for the people that follow us, clients, etc., on our thoughts on the markets and what's going on. This summer has been very volatile, to say the least, mainly to the upside. We see things that we normally talk about. The economy just continues to chug right along. No indication that the economy has any weakness. Interest rates, we've been very correct on, are right in the level. They're not going down on the long end, and it's rewarding us with our fixed income portfolios, how we have them structured. Stocks have been very volatile in individual issues as earnings come out, and if your earnings are good and accepted, the stock's up a dramatic amount, and the opposite. If you disappoint in the least, the stock's down a dramatic amount. No longer do companies move 1-2%. Now they're moving 10, 15, as much as 20% per day, based upon how well people perceived what they had to say. So before we even start talking about AI and how enamored people are with anybody that's got anything to do with AI is going to be the greatest investment in the history of mankind. But let me stop right there for right now. Tricia, you and I talk frequently about some of these things, and I'm going to put you on the spot and ask you, where are the investment bargains right now, Tricia?
Short answer, hard to find. The markets have just put such high multiples on the stocks out there. A lot probably due to the AI.
Yeah, by our historical norms of multiples that we're willing to pay to have a good risk-reward balance, it just doesn't seem like it's out there now. If there is good potential, they want you to pay a extremely elevated price for it. And then on the opposite, if it's a company like Merck or even Disney that we're beginning to buy, you can buy it at a normal multiple, assuming that your fundamentals about the fact that there is growth there will ultimately be rewarded if you're patient, and certainly you don't have the downside. But Bill, I'm going to turn to you and ask you, why don't you chat a little bit about a few of the things that we're buying and why, if you will.
Sure. So as Tricia mentioned, there's not many bargains out there. Multiples are stretched across the market. So we try and find companies that are trading at lower multiples than the market multiple, which right now, if you look on 2025 earnings, the S&P is trading at about 24 times earnings. So we try to find companies that are turning themselves around, have strategic initiatives. Perhaps the market has kind of forgotten about them in this AI craze. So as Joe mentioned, we've been buying some Disney. We do like the streaming and theme park business, and certainly Disney's got a ton of entertainment content, probably unparalleled in the marketplace. We've also done very well in Warner Brothers recently, which is really a restructuring story. So they have paid down a dramatic amount of debt. They continue to pay down debt. They're now separating the streaming business from the legacy media business. So we've found some real value there. And then, what some might think a boring old name like Verizon, which, trading well below a market multiple, paying down their debt, probably going to initiate a stock repurchase plan sometime in the next 6 months. And again, with respect to AI that Joe mentioned, all companies are using AI, right? So, it's going to be a prevalent theme. But we have found value in names that wouldn't be direct AI, themes out in the marketplace, but the valuation is certainly more attractive.
Thanks, Bill. Dave, what do you think? I'm gonna throw it to you.
But what do I think?
What are you thinking?
Well, the market is being driven by the AI theme, and specifically, I'm going to pick on NVIDIA as the one name, and the thing that's amazing there is 40% of NVIDIA's revenues come from five companies and from one product line, which is the AI GPU chips. That is an amazing concentration. And to me, that spells risk. And when the White House and President Trump announced Stargate down in Texas, that was a $500 billion, sort of blowout event, for AI. Well, just quietly, that project is being, sliding back. And now all of a sudden there's questions of, can they finance it? Can SoftBank get the money? Can OpenAI get the money? And you're starting to, Amazon is pushing back a project in Ireland. And so you're starting to see a little bit of pushback on some of these projects, while at the same time, the companies are talking about increasing their capital spending in 2026. It just, to me, seems like, they're building a solution right now for a problem that's not evident. What is the monetizable economic proposition for AI? And that's, we're using it here in our efforts, but, we don't pay anything for it. So, anyways, that's what I'm thinking. And also, we think it can be commoditized. I was reading this week where in China, there was 1,500 new large language AI models founded. And when DeepSeek came to market, that took NVIDIA down to $100 a share. There's an AI model in China that is performing better than DeepSeek as far as the efficiencies and all that, and it's being performed on the old NVIDIA chips. So there's some, if you dig deep into it, there's some concern of the AI-driven market in my mind. Very concentrated, looks like it could be commoditized in the near future. So,
Dave, thanks, appreciate it. Let's get back to real quick in whatever time we have left to discuss the fact that we are still buying fixed income products in the 7% area. We believe interest rates are on the long end, not coming down. If anything, they're going to continue to go slightly higher. And we continue to shop for and look for companies that we think are generating a lot of cash with products that they have right now. Bill mentioned Verizon. They'll generate $22 billion of free cash flow. They'll pay half of it out in dividends. The other half, once they pay some more debt down over the next 6 months, we look for them to buy back stock. It's paying us a 6.25% dividend yield. We think at the end of the day we can get a 15% gain in the price of the stock, throw on a 6% dividend. We're making a 20% rate of return, we believe, in the next few years. If we can do that and find more things like that successfully, I don't think we have to step out and try and figure out who's going to be the next company to revolutionize the world. and pay a unseen multiple times nothing just because, yep, that's going to be the one out of all these companies that's going to make a fortune. Don't think it's necessary. So things are going well right now on this last day of July. We're making money. Considering we don't have huge percentage positions in stocks, which we still think is prudent, we're doing almost as well as what the 100% in stock market people are doing. So I thank everyone here on the committee, and let's try and get back middle of August and have updates for people. Brian Curtis, our producer, thank you, appreciate it.